it's just crazy. It's crazy, man. It's crazy because you have to run OBS separate software to set it up. Then you got to get that going, and then it tells you, okay, you're live, and then you can do it. And then anyway, so it's a bit crazy. So hi everyone. So this is my thing, the daily. So let's have a look at what's going on. Basically, it isn't great news, but today I'm very cautious in the markets. I don't think there's a lot of opportunities in the market today, and I'm going to walk you through why. I think there may well be end of day setups, and I think there will be lots more later on, or maybe in the US session it'll start to unfold. But this is what I'm looking for. Roberto, how you doing, man? Okay, good. So here's my thing. Looking at the daily, my expectation is the daily should retrace ideally a bit further. What it's doing right now is it's trying to we've got a weaker US dollar, and it's trying to determine if it wants to keep going, or if it potentially is ready to if it's ready to if it's ready to resume the longer term uptrend. But I think it's had quite a bit of resistance up here, and I think it's potentially likely to come down and connect to the moving averages, or potentially retrace all the way back down to the 1.2 level. I think those are feasible. Problem is, we're sitting in an awkward patch now where there are buyers coming back into the market, but are there enough buyers to pick it up? Okay, and so the problem is that for intraday traders sitting in this area, there's actually buyers and sellers are battling it out. So here are the three possibles that I see. The market stays where it is until the moving averages connect with it, and then true value catches up with price action, and then it carries on, or it comes back down to the moving averages, which is closer towards 1.205, or it comes all the way back down to 1.2, which would be a beautiful, really nice retracement to test, previous highs. That's what I'd like to see happen. And so the problem with that is that when you go look on the lower time frames, this is just insane for intraday traders. And it's a similar problem when you then look at others. Now, sterling was on my watch list today, and it's had a bit of a news spike. So what is that? So if I want to see what caused that, because there wasn't really any per se. I don't think there was any. Let's go have a look and see if there was any calendar news that potentially was the case. So today, Tuesday, no scheduled news, but I will add on low impact, which low impact shouldn't have that kind of an impact on the markets. It shouldn't. So let's have a look and see. We just passed the 2 o'clock session, so somewhere around here. No, just like, that's the point. Nothing here scheduled that would potentially have that disruption, and I'm going to show you why. So I'm going to take that away. Shouldn't be the case. Not a big move like that. So failing that, let's look at Forex Live and see what is the story. So maybe a Brexit statement. Here we go. Spikes higher on EU-UK deal in principle, but runs into MA resistance. So that's the supposed explanation for what has caused this spike. And the reason I know that is because pound Swissy, pound Aussie, these were all on my watch list for shorting opportunities. So if you look, looking really nice and bearish, and I am still bearish on them. If you look at the daily, we've broken through support here. We are coming back up, and this is still a valid potential opportunity to head shorter. Just meant that for anyone trading on these lower time frames, they would have been hit by that spike. They shouldn't have been, because price was pulling back into those areas, and I only suggested it early over here. So it hopefully shouldn't be the case. In principle, if this starts to head lower, I'm going to go back to being bearish on it. So I was talking about the US dollar, the euro, kind of that being untradeable. So if we kind of go to this, if I just hide these drawings and stuff, price action being really choppy. So let's go to a fewer window layout. Sorry, because it's obviously quite messy. There we go. So let's have a look at this. Much better. And we can maybe bring these back a bit. So the idea being, as I've explained, what I expect to happen on the daily, looking at sterling. Sterling has retraced on the daily back into the moving averages and actually back into prior resistance. Now, the price action behavior cycling through this has produced higher lows, and over here a bit of a support level that acted as a higher low. Now price has broken that higher low. So what does that mean? That means that the uptrend, because there's a rule, there's rules in the market behavior, that it goes from an uptrend to a downtrend to sideways to a downtrend to uptrend to sideways, and there has to be a very specific thing it does that says, okay, this uptrend is finished. And I believe this would qualify over here as price breaking these previous lows, especially here, and therefore because we've broken that, this uptrend is now done. So what I do in those situations, as soon as the daily uptrend, for example, as soon as the daily uptrend is broken, the first thing I do is go to the higher time frame, the weekly, to see why. And when I switch it up to the weekly, then I get a bit of an explanation as to why it's done that. It's been hitting monthly resistance. It's produced a swing high here. Moving averages are down here. So this could potentially come back down into this area here towards the moving averages down here as potential support. So I'm going to mark that area. So it's actually close. That's more. Let's just put it down here. That could be potential support. Okay, so that could be the case. Price comes down here and carries on up. But that at least tells me that that is a weekly retracement now. Then okay, all right, cool. Sorry, I wasn't seeing the comments at first. So that's part of it. So that just means, you know, stay away from it, but that's fine. That just means that has I wanted to show you the daily because the daily has met my minimum requirements back to the moving averages as a retracement. So technically speaking, has the Australian dollar. It's also pulled back into previous highs, hasn't connected with this level, which would be great if it could. So it could potentially head lower. So again, I'm just trying to put all of this into perspective. The Kiwi dollar is potentially ready to carry on. That is a weekly support resistance level. It could carry on from up here. So we've got those, and I think I spoke about those yesterday. Dollar yen, I would just stay away from. Just dollar yen is just a nightmare. I wouldn't trade that. And it amazes me the number of traders who trade dollar yen because they think dollar yen is important. Dollar yen might have been fantastic to trade 10 years ago. I would say for the last 4 years, it's been a nightmare. Okay, so anyone who punts dollar yen as something you should be looking for trades on every day, I don't think so. I'd love to see their success rate on that. I'd be very surprised if they were doing it. Whereas I do find dollar Swissy looking good. Dollar Swissy looks quite bearish. And you look at that overall chart, that's a lot cleaner as a chart than dollar yen by comparison. Dollar yen is just insane. So it's very important. What we trade is much more important than anything else. This is now overextended. So dollar CAD could potentially find its way back up here. It could be at the beginning. We've got a bullish candle, which could be the start of a retracement. It's also overextended. It's not just a little bit overextended. It's pretty much overextended. So this could provide a turning point as the market retraces back up into 1.29, 1.2950, or 1.3, which means that this area here could provide shorter term bullish or shorter term intraday trading opportunities. What does that mean? If I look here at that 15 minutes, that is how much room there might be for intraday trades. If the market decides to start trending higher, there could be an orderly structured trend. I want it to look like this, but going up on this time frame, trending higher, and therefore there could be some potential intraday opportunities. Remember, I only need 2 to 5 trades per week. So if I get one trade out of that, that's fine. If I get 2 out and they're both profitable and the market conditions are good, fine. I'm just highlighting what I might be looking for if price starts to climb to the upside here and the daily starts to retrace. So there's a lot of indication here that a lot of the charts would be happy seeing a daily retracement. It doesn't have to happen, but if it did, it's because there's enough information to say that. Euro GBP has suffered a bit from that spike, but that 4 hour looks nice and bullish. Okay, so if you look here again, we're overextended on Euro Yen. We need to potentially connect to those moving averages, but again, it's very keen to carry on. And actually, the JPY crosses are looking pretty good. So we've broken through support here, and my problem with Euro Swissy is that overall, look how spiky the price action is. Euro Swissy is not traded, in my mind, sufficiently by traders anymore compared to what it used to be. It used to be a staple. I mean, you used to have all the Swissy pairs and all the JPY pairs. They were, in fact, maybe even preferred to GBP pairs and so on. And this is when I started. But ever since the central bank interventions, which was around about 2013, 2014, they've never really become... I mean, they destroyed brokers. They wiped brokers off the planet, and they almost destroyed some of the banks in many ways in terms of losses. They were just huge when they messed around with those central banks things. And I just think traders have just gone, you know what, I'm probably never going to go back to those again. But anyway, so we'll see. You can just see it's not ideal, and I really have a problem with that. And unless the price action is not looking spiky. So basically the daily just looks messy and spiky, and that's my concern. That's Euro CAD. Euro Aussie is, look at that daily. That's interesting to me. The daily showing almost a double bottom. Okay, fine, but definitely a level of support here, and it's broken these highs. So it's potentially changing direction here, but it's not just that. It's coming back and producing bullish candles here off a monthly level of support and resistance. So it's indicating that it could potentially head higher. The only problem, in every other respect, it looks great. Looks like it's getting ready to go long, but this kind of spikiness implies not enough momentum yet. But I would keep an eye on it, because that could potentially start climbing and going higher. Euro Kiwi has now done a sufficient retracement and could potentially resume. It's higher risk now. Let's stay away from that. Pound yen. All the GBP pairs I was generally bearish on it, like pound Swissy. So if you look at that 2 hour and the 4 hour and the daily coming into this level of support, so I've got to be cautious here, absolutely. But it was looking really good. So I would have liked to have seen, it didn't happen, price pulling back into the moving averages and setting up to go short. But there could still be something. The overall trend for sterling was bearish, or is bearish, on pretty much, well, most of its charts. So therefore there could be some opportunities to short to the downside. I would still consider those, and the spike has happened. So pound CAD, look, that was beautiful. That was beautiful. There was a nice pullback there. If you had traded this as a potential trade down, you would still be in the trade, and you'd have hit your 1-to-1 probably. Yep, you'd have hit your 1-to-1. But we're coming into levels of support soon. So the 5-minute is probably the best one in that situation. Pound Aussie, overall, again, pound Aussie still sits on my likely to potentially head lower. I mean, it didn't break this previous high, so that trade is potentially still intact. But level of support becoming resistance on the daily as well could potentially start to head lower. So pound Aussie might be the best one then. Pound Kiwi also looking nice and bearish. And in fact, I forgot, this must have been a trade idea going back here, going back to the 2nd of December. So that was a pullback into these areas looking to go short. I'm actually going to go through my posts and see where I put that up. And yeah, cool. Aussie Kiwi daily potentially producing, it's close to the equal high, but it could still continue. But I'm cautious of this one. It could head lower, but actually what could have happened is, if this is a monthly support level, this could ultimately look like a bullish rejection of those levels. So let's have a look at the weekly. There we go. There's our bullish rejection candle. So this could be due for a retracement up to 1.06. Could be. I'm just a little bit cautious, but if it is really bearish, it's just going to carry on down. So it's just going to push its way through over those ones. Aussie CAD. So to me, it's just as important that I talk about charts that you should definitely avoid versus charts you should maybe consider. This still looks relatively bearish to me. And so pot Aussie CAD short could still provide opportunities. Aussie Swiss short could do that. Okay, so Aussie yen. Aussie yen here on the daily. This is what I want to talk about. Resistance, uptrend prior to that, price breaks through, price comes back, produces a bullish candle. What was the difference in the highs? 77.50, 77.51, 51. Yeah, that's fine. Not really enough to trigger anyone in, and a potential bullish candle today. So let's talk about this as an end of day setup, as well as tomorrow or the next day's intraday trading. All right, so today, if it sets up as a bullish candle by close of day today, that could be a potential swing trade to the upside, which means tomorrow I would be looking as an intraday trader for breaks above the high of today's candle, as an indication that the market is following through. But this area in blue has definitely offered some resistance, so I will be cautious around that. But if it is going to resume that longer term uptrend, it's going to push its way through. So basically today means stay away, come back tonight to see if it's going to be bullish, then it can go on my watch list tomorrow and I can monitor it for breaks above the high. Same goes to Kiwi yen. It's the same thing. Kiwi yen may be setting up as a swing high to carry on up, and that might be the case. And so I'll do the same thing for trading plan. If it does close as a bullish candle, tomorrow I'll be looking for trades above above the high of today's high where it closes. Let's have a look at Kiwi CAD. Kiwi CAD also potentially setting up bullishly. Could be turning on Kiwi Swissy. Nice downtrend. And again, also more bearish than bullish, but at some point it's going to start to potentially turn around. So I'm a little bit more cautious on that one. CAD yen, overextended, just a little bit on that, not great. And yeah, Swissy yen looking pretty cool. Today the Swissy is definitely moving, looking at that daily. Sometimes some people would call this a bear flag, meaning that it's moving up, getting ready to ultimately drop. It's overextended and it's had some exhaustion here, so that's the risk. But overall it is looking pretty good. In situations like this, where it's overextended and there's exhaustion, I want to take shorter trades. I basically want to get just a little bit out of this, because it might not go all the way up to here. It might just go up a little and then fail. And so therefore the potential profit, or the safer profit relatively speaking, is just on a very small trade where you trade on the lower time frames. Let's have a look at gold. So let's talk about what happened to gold. So yesterday I kind of said, well, one of the possibilities could be an outside bullish candle, which actually happens not all the time. It's in the minority of the time, but it is definitely a possibility. When you get to a situation where half the market on the longer term wants to go one way and the shorter term want to go the other way, you can often get a situation where the shorter term sets up with a signal as expected and then subsequently is triggered and reversed. And I don't see that as a market manipulation. I don't see that as somebody in control. I see that as a genuine follow through and a battle between bulls and bears. So we had 3 different original plans for gold. Turn where it is here, turn in the moving averages, turn in this blue area, this area of resistance, or break up and break these previous highs, which is then an indication of returning to the longer term uptrend. So far, it now looks as though it's now going to attempt to return to the longer term uptrend. Is there anything else that the market could do? Yes. The least possible, but still the least likely, but still possible, is that it hits the 50 moving average, like it did here and here, and turns around. But usually the support resistance levels are more powerful. Okay, but it might hit a fib level, or it could hit up to 1.9 and then find resistance and then head down. It can do that. It's allowed to do that. It's just that those are the least likely options. Usually by the time if it tests 1.9, it's broken the previous highs, and it's actually now looking more like it's going to continue in the longer term. It's going to resume the longer term uptrend. So that's why yesterday I was a little bit cautious because of that, but looking for that follow through ultimately, and it effectively went below the low and reversed on that, and now I'm just waiting to see what happens. So today we've broken that high. I've just posted this, so now I might be looking for long opportunities to the upside on the lower time frames, and so that's kind of unfolded there. Which in silver, we'll have a look. So silver is breaking through resistance here. Did a nice little flat level breakout, which I just saw now. I just basically was not looking at silver at all. Copper is potentially going to set up with a swing trade to the upside, so I'd stay away from it anyway. Platinum is attempting to find support here, just looking at that bullish price action. Moving averages, nice round number. Again, I would really like for it to come back and set and test. Nice round number, come back and test that. So I'm still not convinced that gold and the metals are ready yet to resume their longer term uptrends. I feel they haven't had enough of a correction. But that opinion could change as they start to just edge higher than as they start, because I'm not in the market. So I feel that they need to come down further down. But if they start to really just start to trend higher, then I'm going to look for shorter term trades to the upside. Oils, so palladium. My problem with palladium is just this daily. That is just a nightmare. So that's a no-go until it starts to behave in a better fashion. Looking at Brent, for example. So Brent, my issue with Brent is this. My issue with Brent is there's a move. Hey Richard, how are you doing? My issue with this is, look at this. Move up, nice retracement. So a decent move up, small retracement down. Forget about this for now. Just temporarily forget about that. Then a big move up, normal retracement, big move up, normal retracement. Then it suddenly does a small move up. It just breaches the previous high. So now there's lots of energy, breather, lots of energy, breather, lots of energy, breather, boom, not so much energy. So often people who follow, let's say, Elliott wave theory, they're looking for, this isn't really a surprise to them. But from a price action perspective, the communication, the message from the market is, I'm not as bullish now as I was in previous moves. And there's always a possibility that you just get a slightly higher high, you could be getting a bit of divergence, and actually price could be faltering a bit. It has come back down to this monthly level of SR, and it is testing it as support, so there could be a bullish candle here, and it could be ready to continue. But on an intraday basis, it's a nightmare, because it's exactly that place. It's, am I faltering? Am I going to have a weekly retracement? Is this the end of it? Or am I just taking a breather, or am I going to resume? So in the beginning, as a newer trader, you kind of need very obvious, well-behaved charts to help with your confidence that the markets can be traded because they can be predicted. As your experience improves, your ability to deal with fuzzy logic, with where the market is not exactly behaving 100%, but is behaving close to what you would expect, you are able to navigate that because you have more experience. So you can navigate subtleties a lot better. But in the beginning, like, you're screwed. It's not your fault. It's just that's why it's better for beginner traders to trade higher time frames where the markets tend to behave in a more formal fashion, or instruments like the indices that will trend more often than not. But currencies are insane. And so whenever I meet someone who's like, yeah, I only do currencies, that's all I ever do, then I know the answer before I ask it. I know that they're not consistently profitable because the currencies for the last 3 or 4 years have not provided beautiful, consistent trends. They're just not in the way they used to. So, and it's a lot like giving a horse rider, somebody who's learning how to ride a horse, a terrible horse, one that is very erratic in its behavior. What is the impact going to be on a beginner trader for that? So, crude oil, I'm just staying away from it. But there is the potential by end of day it could set up bullishly, and it could start to break through this. I'm going to mark this as a level of resistance. The fundamental stuff isn't crucial. Why is the fundamental stuff not crucial? Because the fundamental stuff is not going to give me an edge here. I can read 50 different articles, all of which might contradict each other, saying to me, well, there's reasons why oil should go up, and then it drops. All the articles could say oil is going to increase in value, OPEC's going to do this, Arab states are going to do this, the US is going to do this, and then it just drops. So that doesn't really help. It's much easier for me to follow on price action, saying that if it breaks above that, I buy. If it falters below this, I'm going to sell, and right now I'm not going to trade it. That's a much more practical approach. Cryptos. So let's look at Bitcoin. So there is a potential break below this level. Only because, not because the daily doesn't look great. It's only because we are very overextended here. Massively overextended. We're at all-time highs. There's nothing wrong with the market taking a breather and then resuming the longer-term uptrend. And therefore, if it's going to do it, it's going to start to break down and go lower. And the target area is somewhere here, which is similar to the other chart that I showed you, which was it dollar CAD? Was it dollar CAD where I said there could be a window on the way up in the retracement on the lower time frames? So if we look at Bitcoin, there could be a similar window. If we go back to the monthly or the weekly here, there could be a similar window if one was predisposed to trading this somewhere down to 15,000, maybe down towards 13,000. Somewhere in that area, that if we went on the lower time frames, that there might be, when you look at it, there might be some shorter term, it's quite a bit of room, there might be some shorter term trading opportunities. That's all. Again, only looking for 2 to 5 trades per week. And Ethereum would have a similar type of potential thing where it's going to break down. And what does that mean? It means that when I said that there could be a flat level breakout, this is kind of what I'm talking about. So kind of a flat level area. It's not actually a great flat level, but the implication being that it wants to do that, and the way in which that would be the case is if this becomes bearish. And if you look, that MACD is heading lower. It's breaking down below 0. It is bearish, but we're not there yet. What is interesting is that price here is higher than price here, but on the indicator, the indicator here is lower than the indicator there. So that's bearish. Anyway, could be potentially be the case. So I'm watching that. That's a possibility. Then looking at the indices. The indices, my issue is this again. Finds resistance, pulls back, bumps its head, just manages to break through, and then takes another breather. So the US, as I said, coming online. This could be the case. What I'm looking for on the S&P is for price to potentially break above that daily pivot, climb higher, but also to head lower. So there's just a real mix of different things. There we go. So I took a potential trade to the downside. The NASDAQ is now heading down. But again, this is one of those trades where actually this is the area in which I was looking for price to turn around. And it produced an indecision candle. And then it didn't produce an outside bullish candle. It just broke up higher. And since then, I placed the order around these two candles. And since then, I've been on this video. And therefore, it went up here. And obviously, it's just fallen down. So I'm not triggered into the trade. I'm taking profit ahead of these levels. Okay, so there we go. Where is my trade? It should have triggered me in. I'll have to have a look. It shouldn't have triggered me in and stopped me out. There's no way. Unless it did this. Triggered me in here, stopped me out, and then carried on down, which could have. Let's go and have a look. 15 minutes. Let's see what happened. Did it do that? Yeah, there we go. So here we got triggered in. No. It would have to be that one. Sorry, I want to see this. I want to see if it did that while I'm here in front of you. So what did it do? Would it triggered me in here? Would it stopped me out and carried on down? So there we go. That's why the order's not on my screen, and I'll have a look at it later, but that was a losing trade. Okay, so that's fine. I'm not too concerned about that because I'm recording it as it was recorded as a demo trade. So I might upload that later, but I'm not too concerned about it. That was not on my client funds. That was on another account. 15 minutes. Okay. So that was an outside bar. So that's ironic. It actually broke down, but it actually triggered me in and out on the 1 minute time frame. That's interesting. But let's talk about what it means. What does it mean? It means now that possibly the NASDAQ wants to do a retracement back into this area. And if it does that, if the NASDAQ does a bearish move, all the other markets are going to go bearish. Okay, it's starting to break the lows here. Look at that. It's starting to break those lows. It's potentially going to head down here, and that's because it needs to take a bit of a breather. Okay, so let's see if it does that, if that's what it's going to do. That means between today and tomorrow, it's potentially going to come down here. We could end up with a nice bullish candle on Friday, and the market's going to carry on up to the upside. Could be the case. So that's it. I might go and have a look for some big moves. We see the Russell had a boost to the upside. Let's see what's happening with the DAX as well. They're all pretty bullish. They're okay. You know, these markets are holding. They're not looking weak. If they're weak, they'll start to drop and collapse and test support. They're not even looking at support. They're kind of testing the highs. They look a little bit more bullish, but they're not good trending. This is not good trending behavior. I need well-behaved trending behavior to the upside or to the downside. This is better than nothing, but it's not ideal. I want something that's ideally much better than that. And that's it, folks. So I think the ones that are catching my eye the most are some of the GBP pairs to the downside, some of the end of day stuff. So notice today my intraday trading is not as active because we've got this general mess compared to the last few days. And so I'm looking at Kiwi yen, Aussie yen for end of day bullish candle setups. And then tomorrow I might intraday trade them to the upside. Gold, maybe some longs, maybe. Some of the indices I'm going to watch and keep an eye on it. And that's kind of it. Cool. Does that make sense to everyone? Does my logic and rationale kind of make sense to you? Any questions? Nope. Everyone's okay. Cool. All right. I'm going to wrap this up. And I'm going to try and do it again tomorrow. Okay. If I don't do it every day, I'll do it every other day. I'm going to try to do it regularly. But nobody seems to have any questions. So I'm going to wrap this up. And I will, and then I'll see you tomorrow. Everybody seems fine. Okay, guys. Thank you very much.